You know, there's a lot of people that feel like they're paying way too much in taxes, but actually not paying taxes is like this easy.
One shot, not a future for sure. Let's go. I'm turning dreams into reality. Yeah, it's one shot, not a future for sure. Let's go.
Check it out. So today we're talking about the easiest tax hack. No matter your income, if you feel like you're paying way too much in taxes, I got news for you. I'm gonna show you how to crush that, take that one down right now with two really awesome strategies. First of all, let's get clear on the facts. Employees, meaning you have a W-2 job, you are taxed hard and heavy. The tax system is honestly set up against the average income earner. The government offers few tax breaks for W-2 employees. However, for those who put money back into the economy, the government offers several tax incentives. So no matter what your level of income is or whether you work for somebody else, you should start investing to take advantage of two major benefits I'm going to show you right now. So the first thing is, if you become an investor, you need to understand something called capital gains. Because capital gains is a way for you to avoid maximum taxes that you're going to owe the government if you do all the normal stuff. So let me describe this. The easiest tax hack to use at any income level is the capital gains tax. Capital gains tax is owed on the profits made from the sale of an appreciating asset, such as stocks or real estate. In other words, you buy something and when you sell it, instead of the normal tax rate, there's going to be a capital gains tax rate. And there's two types of capital gains. There's long-term and there's short-term. And there's a really important difference between the two of them. Let me show you. Now, let me first help you understand what long-term capital gains are. When you're filing for your taxes, you have a filing status. You're either single, you're either head of household, or you're married and you're filing jointly. And depending on that and your income, it can determine whether you're literally paying nothing or 15% or 20%. Now, mind you, the maximum federal tax bracket is 37%. So capital gains, when you bought something and you sell it for a lot more money later, guess what it means? It means that you don't have to pay that full monty of taxes. The government wants the economy to have a sense of stability. So to incentivize the people to hold assets for longer periods of time, they offer lower taxes for those who hold assets for at least 1 year. Long-term capital gains start at 0%, the lowest bracket, and they max out at 20%. There's definitely an argument here that says if you're going to buy and sell something, if you hold it for at least a year, you're going to be penalized with less taxes. But don't worry, if you hang on to the end of the video, I'm going to show you how to get out of that altogether. But next, let's talk about short-term, like I'm going to buy and sell this asset in under a year. That situation looks different.
Well, you look the same.
Yeah, thanks. And you look different.
Short-term capital gains definitely looks different, and you're going to feel like you're about to get punished. Short-term capital gains taxes can apply to day traders or short-term real estate speculators. Rates start at a minimum of 10% instead of 0 for the lowest bracket. They go all the way up to 35%. And in most cases, it's just better to hold on to the thing for a freaking year than it is to hurry and sell it and get punished by paying a lot more taxes. So understanding capital gains and saying, hey, is there a strategy for things that I can buy and sell where I might literally put myself in a bracket of 0 or maximum 20%? That's just the start of a really smart tax hack. From here, it gets really cool. Kris, paying 10, 20% taxes. Okay, you got something better than that? Yeah, how about no taxes at all? How do you do that? It's called deferring taxes. More importantly, it's about not paying anything now and maybe not even paying something later. Let me show you what this is. There's a special IRS code called 1031. And Section 1031 of the Internal Revenue Code allows an investor to defer capital gains tax if they use the money from the sale of the asset to immediately invest in another like-kind asset, most commonly used in real estate, basically for avoiding the 20% capital gains tax. This allows investors to maximize their capital in their next investment. And remember what the government is thinking here. Listen, you just made a pile of money, and if you'll keep it in the economy, you don't even have to pay taxes at all because you can defer it till a later time. Well, do you know what wealthy people do? Let me show you. Let me give you an example here. You buy a piece of property, and then later you sell it, and you're like, crap, I made $100,000. But I'm going to do 1031 exchange and instead take that and my profits and I roll it into two properties. Shoot, when I sell those, I now have $250,000 of gains. Don't worry, roll it into 4 homes or roll it into 10 homes. Well, eventually you're rolling it into what you should be paying millions in taxes, tens of millions of taxes, hundreds of millions. But do you know why wealthy people will never actually sell off the real estate and pay the taxes? One, because they don't want to owe all of that money in taxes. It would be a nightmare. But more importantly, all of that real estate is putting off residual cash flow. And when you own now dozens and now hundreds of properties, dude, that cash flow is so good, your ROI is so big, it has compounded so meaningfully. Why would you ever want out? There's nothing you can buy, there's nothing you can invest in that can produce these kind of gains. That's pretty awesome. You know what's even cooler than that? Each of these homes are producing a cash flow, right? And because of depreciation, that's counteracting the positive cash flow. So you're literally putting money. You own a big portfolio and you're like, oh, I put $40,000 in my pocket this month in positive cash flow. Guess what your taxes are as you hold the asset on the cash flow? Potentially nothing, because you can depreciate the asset and eliminate tax on any of these gains as well. Which means, shoot, if I just always own the real estate and sell it and double my portfolio, and 5 years later sell it and double my portfolio, and I never pay taxes on that, but all the cash flow it gives me in the meantime, you tell me I don't have to pay taxes on that either? There might be something to this real estate game. And finally, I'm gonna give you a third benefit bonus just for fun. One of my favorite tax strategies just comes from owning a business. You see, even if you're a W-2 wage earner, you're an employee that works for somebody else, you can still have a business on the side. The business doesn't even need to do a lot, but guess what owning a business does? It unlocks 250 plus different tax benefits, literally write-offs. The code allows you to write off a part of your house for business, your cell phone, some of the miles that you drive, some of this that you do, some of the travel, the food that you're eating, and all of a sudden your taxes are also massively being lowered. You take all three of the things that we talked about today and you could combine them into a real estate investment business. Check it out. What do you mean, Kris, by roll all three of them together into a single idea? Imagine for a moment that there was a guy you knew that had done like $2 billion worth of real estate, 6,500 homes. And he said, yo, if you have money sitting in a 401k or an IRA, if you had equity sitting in a home, you could literally extract that money. You could put it into a real estate business where your real estate is earning you 25, 35+% every single year. And you're like, whoa, over 10 or 20 years, that would compound into many millions, even tens of millions of dollars. And that person would say, right. Do you know someone that might be willing to do that with you? Because there just happens to be a magic link below this video in the button. If you click it, you're gonna learn about what it could look like to partner with me. I will run the entire business, you be passive. I'll do all of the work, don't worry about it. But if you put up some of the money from a 401k, IRA, equity in a home savings or whatever, we partner up on this stuff. And as this compounds and grows, it is eventually gonna spin totally out of control. And we will be leveraging some of the smartest tax plays in the IRS's handbook. And guess what? You're gonna be winning at a whole new level. Click the link, learn about partnering with me. Dude, let's play. Whoa. You want me to use my 401k to invest in real estate? Bro, don't you know that I get a match? I'm getting freaking free money. I can prove to you that your 401k is the worst retirement plan of all times. You may not be ready for this information. You may not want to hear it, but if you watch this video right here, I'm gonna prove it right.